Want a piece of Dubai's booming real estate market? Now you can invest from just 500 dirhams, all through your phone. We will show you how to get started with fractional property ownership today.
Welcome to ZED-Ed TV. Today we're looking into something that probably sounds completely impossible to most people, investing in high-end property in Dubai.
Yeah, you hear Dubai luxury property and you immediately think, okay, that's for billionaires, right? Not for me.
Exactly. That's the usual thought. But the information we've got from the analysts suggests there might be another way in, a path that kind of bypasses that exclusivity.
That's right. They've been looking at a platform, or maybe it's an app, called GetStake.
GetStake, right. And the really fascinating bit, the key thing the analysts pulled out, you can apparently start investing in Dubai real estate with a surprisingly low entry point.
Yeah, their findings point to, I think it was 500 dirhams. That's the specific number they kept highlighting.
500 dirhams. Wow. I mean, that's tiny compared to buying property normally. Less than, what, 140 US dollars?
Very accessible.
So how does this actually work then? According to the analyst report, how does this platform let, everyday investors grab a piece of these, like, expensive Dubai apartments?
Yeah. Well, what the analyst detailed is that it's basically fractional ownership.
Fractional ownership, okay.
Yeah, so you're not buying a whole apartment, obviously. Instead, you buy shares in a specific property listed on their platform. You sort of co-own it with a bunch of other investors.
So you literally own a little slice of the building.
Oh.
And the analyst's info says you get a cut of the rent, too.
Exactly. The analysis showed you earn your portion of the rental income proportionally. And the platform, it seems, handles all the usual landlord headaches.
Like the management, finding tenants, all that stuff.
Right. The management, the maintenance, the paperwork. Your shares are legally tied directly to the actual property itself, which is important.
Okay, that fractional part definitely explains the low entry cost. Makes sense. Now, about Dubai, why did the analysts focus so much on that market?
Well, their report really painted a picture of Dubai being one of the fastest growing real estate markets globally right now.
Really? What were the reasons?
They pointed to a few key things. Zero income tax, which is a big draw, incredible infrastructure development, and particularly attractive rental yields. They were quoting figures based on their data, often between 6 to 8% annually.
6 to 8%, wow. And I think I saw they also mentioned significant price growth, something like over 17% just last year alone.
That's correct, yeah. So the analysts are saying the market conditions themselves are a huge part of the appeal here.
Okay, so good potential returns. But what about legitimacy? I mean, is this all above board? What did the analysts say about that?
That's a fair question, and they did address it. Their report emphasized that GetStake is fully regulated by the Dubai Financial Services Authority, the DFSA.
The DFSA, okay, that sounds official.
Yeah, they described a pretty secure legal framework, apparently designed to directly link your ownership shares to the property title. And things like income, documents, is all tracked within the app, seemingly.
All right, so the picture the analysts paint is that it seems regulated, and this structure makes it genuinely accessible. But what about the downsides? There must be some, right? It can't all be positive.
No, absolutely. No investment is risk-free. The analysts did note that liquidity isn't like, say, trading stocks where you can buy and sell instantly.
Ah, okay. So you can't just cash out whenever you want.
Not quite that easily. Their analysis suggested there's typically a recommended holding period, maybe 3 to 5 years, or you need to sell your shares to other users on the platform, but only during specific, like, biannual exit windows they mentioned.
Right, so less flexibility there.
Exactly. And of course, like any investment, returns can go up or down depending on the market. That's standard.
Okay, so let's quickly recap what the analyst presented. It seems this platform offers a REIT to owning a fraction of Dubai real estate, starting quite small.
Yes, their findings really highlight the potential for, passive income through the rental returns. And crucially, they also pointed out the benefit from property appreciation.
Oh, right, the value going up.
Yeah, so that gain comes when the property is eventually sold off, on behalf of all the shareholders. You get your percentage of whatever the final sale price is, hopefully higher than the purchase price.
Got it. And we shouldn't forget that regulatory point the analysts made, being overseen by the DFSA.
Adds a layer of security.
But balanced against that is the liquidity issue they raised. You need to think about that holding period or those specific exit windows.
It definitely seems like a unique way, based on their analysis anyway, to potentially tap into a high-growth market that might otherwise feel completely out of reach for most people.
So thinking about everything the analysts shared about this platform and the Dubai market, would you consider investing in Dubai property this way? Definitely something I'm all over.
And hey, if you found this exploration helpful, please do like, subscribe, and share it. It helps others find us.